Right. So as I was saying that you need to be able to differentiate between major structure and minor structure, right? So now it comes with understanding the candlesticks each and every time, right? So what's happening within the candlesticks? So we're going to look at an example of a minor high in this case. So now the black candles, they are bullish candles. The white candles, they are bearish candles. So now you need to understand that on a bullish candle, right? So we have do you guys know the OCHL? Have you ever seen this somewhere? OCHL.
Open, close, high, low.
Okay, open, close, high, and low, right? So in a bullish candle, what happens is that price will open around this area here, right? And then create what? Create a low, and then a high, and then a close, right? And then in a bearish candle, right? So it means that price will open up around this area here. It creates a high, right? And then a low, and then it closes around this area here, right? So it's something that you need to understand, right? So in terms of these candles here, we understand that price opened around this area here, created this high, and then it closed around this area here. So technically, around this candle here, price was doing what? It was pushing to the upside, right? Now, on this candle here, when we look at price, it opened around this area here, created a low, created a high, and then ended up closing around this area here. So it means that price was pushing to the upside around this area here, right? So it was pushing to the upside. Now, with this bearish candle, price did what? It opened up around this area here, created this high, low, and then a close. So technically, price was pushing to the downside around this area here, which makes this a minor high, right? Are you guys following? Are you guys following?
Yes.
Okay. So in terms of another version of a minor high, right? So we need to understand around this area here. Price opens up around this area here, creates a high, and then a low, and then it closes around this area here. So technically, price is pushing to the downside there, right? So price is pushing to the downside around this area here. Now we have a bullish candle in between. What's happening here? Price opens up around this area here, creates a low, a high, and then a close. So technically, price is pushing to the upside around this area here. And then we end up getting a bearish candle. We open up around this area here, creates a high, a low, and then a close. So technically, price is pushing to the downside. So hence we regard this to a price to have created a minor high, like that, right? It's not visible enough, but you just need to understand the candlesticks, right? So let's look at a minor low. So in terms of a minor low, again, price opens up around this area here, creates a high, a low, and then a close, right? So technically price is pushing to the downside around this area here, because even on the second candle, price creates an open, high, low, and then a close. So technically price is still pushing to the downside. So again, we have a bullish candle, so it means price is pushing to the upside. Now you understand the open, high, close, so meaning here price is pushing to the upside like this, hence we have a minor low. So in this case, price is pushing up, right, and then down, and then up again, hence we have a minor low, right? So sometimes reading the candlesticks, right, from a higher time frame, you'll understand that, oh, okay, even though I'm looking at the 4-hour time frame, there's no need for you to scale down to either the M15 or, yeah, let me just say the M15, right? You can just look at the 4-hour time frame and just anticipate that, oh, okay, on a 15-minute time frame, if it happens that I scale down to the 15-minute time frame, I'll be having a minor a high or a low around that area there. But if I'm looking at the 4-hour, I'll be reading that as a minor high or a minor low, right? So let's look at these candlesticks around this area here, right? Let's look at these candlesticks around this area here. So here, right, around this area here, we have price breaking the previous candle's highs, right? Price is breaking the previous candle's highs. It means that around this area here, price is pushing to the upside, right? Now we end up breaking the previous candle low. It means that price is pushing to the downside up until this area here. Price breaks the previous candle's highs. It means that price is pushing to the upside like this, right? Up until we create this high, right? So we create some bearish candles. Price creates a low, right? And then now, according to how we read structure, right? This high here around this area here, it will be my swing high. This will be my swing low because it creates it created a break of market structure around that area there, right? So when we look at this around this area here, right? So we have price pushing to the upside to create this wick, and then price started pushing to the downside, right? And as you can see around this area here, I indicated a shift in market structure, right? The main reason why I indicated a shift in market structure here, do not forget, guys, whenever we are reading internal structure, we can use a wick break, a wick mapping to wick break. It's still okay, right? So again, the condition for us to get a shift in market structure, we want to see a break in market structure and then a shift, right? And then a break of the low. So here, price was pushing to the upside, right? Do not forget, we are using type 2 mapping in this case. Do you guys still remember how I explained yesterday that when we are looking at swing structure, this is swing structure, right? We want to see a candle body close, so we get that candle body close around this area here. But when we are looking at internal structure, right? When we are looking at internal structure, we can still use a wick mapping to wick break, right? So this can be seen as a break of market structure, and then when price wicks below this low, it can also be seen as a potential shift in market structure. Do you guys still remember? Hello?
Yes.
Okay. Okay, perfect. So as price pushes to the downside, right, price created this high, swing low, right? And then again, we regard this low to be a swing low, provided that price breaks and closes above the previous swing high, which is this area here, right? So it means that now we are trading from this low and whatever highest point that we get, right? So this is the highest point that we get there. That's my swing high. And then again, it means that we are trading within this trading range, right? Whatever happens in between, it will be labeled as internal structure, right? So now we get an internal shift. Price ends up pushing to the downside, right? So what is it that we have around this area here? What is it that we have around that area there? What is it that we have around that area there? I beg your pardon? What is it that we have around that area there?
A pause in price.
A pause in price. Okay, pause in price.
A minor high.
A minor high. Good. We have a minor high here. Tawanda, your mic has an echo. Hey, I don't know why, but it has an echo. Just make sure that you fix it, okay? Yeah, we have a minor high here, right? Because okay, so we have a minor high there. The main reason why I'm saying we have a minor high. Look at price again, guys. Price pushed to the upside, created a swing high. Tawanda, please keep your mic muted. And then we have price pushing to the upside. What's happening? Tawanda, please mute your mic. Okay. Right, so as I was saying, this is not the document. Right, so as I was saying, that price is pushing to the upside, creates a high, a low, right? So this is my swing high. Now the question is, when are we going to regard this low as a swing low? When we break and close above that high. Once we start breaking and closing above that high, and then we're going to regard this low as a swing low because it took out the swing high. Now, as price is pushing to the upside, it creates a high, a low, a high, and then price breaks the low, the internal low, right? So where's the highest point? This is the highest point, right? So that's my swing high. And again, I did mention that we can try and spot a swing high or a swing low when we have like a potential internal shift in market structure. So we can regard this as an internal shift because we broke above, we created a boss and then a shift, right? So we want to see a boss and then a shift first to regard this as a shift in market structure. So this is a minor low, this is a minor high, right? Because it is within, it is, these are called minor lows or minor highs or internal structure, right? Internal high, internal low, that's still okay because it is contained within this low and this high. So as price starts pushing to the downside, right, we created this low, we created pullback, and then a continuation to the downside, right? Like I mentioned yesterday that every time when price is pushing to the upside, we work with the assumption that we wouldn't want to see a protected low getting taken out, because right now we are currently trading within this high and this low, so we don't want to see that low getting taken out. Now, how do we know that price has created a swing low, right? In this case, we can use the internal shift in market structure again to get a potential signal, right? Now, price created a minor boss and then a minor shift. So once we start to see that, we can work with the assumption that now price has created a this is internal high, internal low. We can work with an assumption that price has now created a swing low, right? Not necessarily a swing low, but just a low, right? Because we're going to consider this low to be a swing low if we do what? We're going to consider this low as a swing low if we do what?
Break above the most recent high.
I beg your pardon?
We will consider it a swing low if we break above the most recent high that we had.
the most recent swing high. Not
Swing high.
Yeah, that's how I want you to say it. Break and close. We want to see a break and close above. Yeah, each and every time, right? The swing high. So that's then and only then that we will regard this low to be a swing low, right? Now there are different types of shifts in market structure, right? The first one that I spoke about yesterday, it was the basic one, which is this one, these ones, and I did touch a bit on this one. Do you guys still remember?
Yes.
Okay, but now there is another one that's complex, way complex, right? Because like I mentioned that normally when we are looking at a potential shift in market structure, we'll be looking at internal structure, right? So here with these two diagrams here, right, we'll be looking at the internal, the most recent internal high, right? Because this is our swing high, this is our swing low, I mean to say. And okay, let me just use different colors. Around this area here, we'll be having our swing low, and this is the highest point before price broke this low, so meaning this is our swing high, right? So in this case, if we want to see a shift in market structure, do not forget, guys, I did mention that I always differentiate shift in market structure, and I'll be using shift in market structure whenever I'm looking at internal structure, right? So in this case, when price broke this swing low, which is this area here, this is the highest point, right? And then I'll be regarding this high as an internal high, right? So in order to get a shift, you want to see the internal high getting taken out. And then again, the condition is that it should create a boss each and every time. So this is a break of market structure in terms of swing structure. This is a break of market structure in terms of internal structure. Does it make sense though?
Yes.
Yes.
Okay. Perfect. So it means that if price, like in this case, it ends up breaking the outermost. Tawanda, your mic, bro. Your mic is terrible. Is it Tawanda? What's happening? Do you guys hear the weird sound?
Yeah, it's fuzzy.
It's from? Okay, let me do this and then start the session again. I don't know what happened there. Yeah, are you guys still here?
Yes.
Okay. So do you guys recall? Okay, now do you guys understand the whole thing when it comes to the difference? How I explain that I normally use shift in market structure in terms of internal structure, and in this case, this is my swing structure, right? And then this low and this high here, they are called my internal structure, right? So again, you can regard that when price breaks an internal structure, you can regard that as a shift in market structure, and when price breaks a swing high, we can regard that as a trend change, right? Are you guys following? So the same thing is true in terms of this one. We have a high, and the lowest point is this one, and then we have an internal low, and then once this internal low gets taken out, I'll regard that as a shift in market structure. And then when price breaks the swing structure, I'll regard that as a trend change, right? So with that being said, are you guys following? Do you have any questions before we carry on? Any questions before we carry on? Okay. So I'll assume that no one has a question. Excuse me. Right, so for today, let me just share my entire screen so that you guys can be able to see my annotation. Right, so are you guys able to see my annotation?
Yes. Yes.
Perfect. So for today's session, right, so we've covered the difference between internal structure and swing structure, right? And you saw in terms of candlesticks, right? So right now you can still go to, let's say for an example, the 4-hour time frame like this, right? So let's say for an example, we are looking at this price swing here, right? Guys, come on. Who's making noise? Tawanda, come on, man. Keep your mic muted. Tawanda, mic muted. At all times. This guy. Okay. Okay, sure. Right, so let me just remove all these drawings. Right, so like I mentioned, let's look at this price leg here, right, and try to differentiate between internal structure and swing structure, right? So now we can clearly see that from around this area here, right? Let me just start here. Price did what? It pushed to the upside, created a pullback, pushed to the upside, and created a pullback, right? And then pushed to the upside significantly again, right? So as you can see, with these pauses in price, right now we can be able to read that, okay, there is a pullback around that area there, right? And then a continuation and so forth. So I normally use these gray candles, right? As you can see, these gray candles, they are called inside bars. And what you can do is you can go to the indicators and just search inside bar, right? Inside bar, and then it'll show you on what is price doing around that area there. Is it pushing to the upside, or is it just on a standstill, right? So again, from around this area here on this price leg, right, on this price leg here, we can clearly differentiate between internal structure and swing structure without even having to scale down to the lower time frame, right? So now, as you can see, price did what here? It created a high, a pullback, and then a minor boss, and then a shift, right? and then a pullback, and then a continuation to the downside, and then it pushed up, pushed down, and then pushed up, right? So now the question is, where is your swing structure in terms of this price swing, right? So this will be my swing high, and this will be my swing low, right? Whatever that happens in between, it's just internal structure. We look at that again around this area here. We have this high. Sometimes, guys, for a swing high to be created, you won't always get internal shifts and all that. But, you know, like I mentioned, you can still use that as a potential signal that either a high or a low has been created. But you won't get that all the time. So in this case, we have price pushing to the downside, pullback, downside, and then a continuation. Now, where's your swing high and swing low around this area here? So this is my swing high, and this is my swing low. Whatever that happened in between is internal structure, right? Now, as price pushes to the upside, let me just remove all these drawings. As price is pushing to the upside here, it pushes. Sorry about that. We have a huge push to the upside, right? We continue pushing to the upside, and then a pullback, and then we push, and then we create a minor pullback, and then a push to the upside, and then a break, right? So we have that internal shift there because we created a boss and then a shift, right? So in this case, we'll be having our swing low here. Again, guys, what I like to regard as a significant pullback, right? So that's something that you need to practice again. There are times whereby you find out that price is pushing to the upside just like this. But when you look at the pullback here, is this a major pullback or a minor pullback as compared to this pullback here? Is it a minor pullback or a major pullback?
A minor
pullback, right? So again, it's simply up to you, right, on what is it that you want to regard as a minor pullback or a major pullback. But according to me, and if you want, you can still use the very same tactic, right? I want to see multiple candles, and when I say multiple candles, I mean like multiple candles. As you can see here, we have multiple candles in the opposite direction, right? So I would regard that as a significant pullback, and that would help you to be able to differentiate between swing structure and minor structure, right? So it means that, okay, from this high here, I would regard this high here as my swing high, and this as my swing low after price took out this high. Why? Because I have a significant pullback, right? And I would regard this high as my swing high and this low as my swing low. Why? Because I have a significant pullback, right? Now, in terms of this here, right, I wouldn't regard that as a significant pullback. That's just a pause, some sort of like a pause in price, and I would regard that as internal structure. So now, where's my swing high? We have a significant amount of candles around this area here. This will be my swing high. Does it make sense though? Why? Simply because I have a significant amount of candles in the opposite direction, right? So does it make sense, guys? I would regard this as a single price leg, right? I think a lot of people had some difficulties in the exercise because of this, whether to classify a minor high as a significant pullback or as a swing high or as a swing low. Let me put it that way. I think most of you guys had challenges there. Am I right?
Yeah. We had some challenges. I had some challenges.
I beg your pardon?
said like I had some challenges right there because me seemed like a swing structure, like some swing structure.
Yeah. So now you know that, okay? You're going to ask yourself, did price create a significant amount? Do we have a significant amount of candles in the opposite direction in price, right? So if you have, again, it's up to you, right? So when we look at another scenario here, right, we have price pushing to the upside, pull back, push to the upside, pull back, push to the upside, right? Like I mentioned, everything is just subjective to how you'd wanna see price. But again, according to whoever that's watching, would you regard this as a significant pullback? Yes or no?
I was thinking yes,
Why?
but it looks like it's some type of momentum in there. It doesn't look like the other one that you showed us.
Okay. Like I mentioned, it's subjective, right?
Yeah.
Yeah, one can call it a pullback. One can be on some, nah, this is not a significant pullback. I would regard this as a minor pullback. It is still okay, right? But you'll have to sit down and ask yourself, okay, like, what is it that I want to see as a significant pullback in order to classify whatever high or low as my swing high or swing low, right? Now, once you get that right, it is going to open up your mind, and then you'll be able to tackle the exercise that I gave you guys, right? So now, do you have an insight on how to go about identifying minor structure and swing structure, internal structure and swing structure?
Yes, it makes sense.
Okay, perfect then. Because for someone else at this point in time, like you mentioned, Derek, for you, you would regard this as a swing low, swing high, a swing low, and a swing high, right? For someone else, they can be on some, okay, this is my swing low here, or this is my swing high, this is my swing low, so I'll regard this as a single price swing, and then this will be my swing high. You get what I mean? And it's completely fine. I mean, it's what they see, right? Yeah. So just go and try and do that problem again, right? Just go there, try and do it again, right? So again, you can still look at this. Yesterday I told you that these are minor highs. Now you understand on why I mentioned that I classify these as minor minor highs, right? Because as you can see, we just have minor pauses in price, and the outermost swing where we got a significant pullback, it's around this area here, right? So that would be my swing high, and then here we have minor highs, right? Minor highs, and then this will be my swing low. But when you look at the candle around this area here, since well right now you understand the candles, we understand that around this area here, price created what? Created a push to the downside, a pullback, a push to the downside, and then we ended up having an internal shift. You see that? Hence, it is the one that initiated what? The pullback. Now, again, another thing that you need to understand is that we are currently trading within this high and this low, right? So whatever that happens, right? Whatever that happens up until we break either the low or the high, whatever that happens in between, it is classified as internal structure, because your trading ranges from this high to this low, right? Even if you get like, okay, this is my swing high, this is my swing high, this is my swing low, right? So that's your price swing, right? Even if in between you get like major movements like this, right? Again, that's classified as internal structure because we are still trading within this range, right? And now if it happens that price pushes to the downside, breaks this swing low, where's your swing high now? It's this highest point, right? So again, do not forget, identify your trading range. Whatever that happens in between is classified as internal structure each and every time. So just like this case, in this case, we have this high, we have this low. Yes, we get these movements here, right? As you can see, we created a low, a high, a low, a shift, right? A pullback, a break of this high. To someone else, they would be on some, okay, price is now pulling back, so I'll be looking for long-term buying opportunities. But now, when you look at this closely, we can see that we are currently trading within this range high and range low. Price is creating lower lows and lower highs, right? The swing structure is creating lower lows and lower highs. And this internal shift that occurred around this area here is just to initiate to initiate the pullback, right? This internal shift here. It's for initiating the pullback before another continuation to the downside. So you would understand that, oh, okay, just as much as my range is from this high to this low, right? So it means that technically we are still bearish. When I see this shift here, I shouldn't buy looking to take out this high here, right? You know that whenever you will be risking around that area there, you'll be risking less because you know that you are taking, you are taking a counter trend trade. Are we together?
Yeah.
Okay, so we have this low, we have this high. We can call this high as swing high because it took out that low, right? So we are going to get a trend change, right? If price breaks and closes above this high. Now, when you start to see a significant pullback, it means that, okay, you can classify this as a swing low. But now, when you look at this, we have a high, a low, a high, a low, right? What is this? Is it swing structure or it's internal structure? Is it swing structure or internal structure? What is this?
Internal.
Why? Why, Derek?
Because it didn't break. Hold on. They didn't break the previous high yet.
Why is okay? That's your reason. Let's hear. Let's see another
Previous high, previous.
Because the president. Sorry, you can go on.
Are we still trading within the last high and the last swing low that was made, the most recent ones? We're still in that trading range.
Good.
We have not hit either the swing high or the swing low.
Good. It is called internal structure because we are still trading in between this range high and this range low, right? That's the main reason why we classify this as internal structure. Yes, hence I mentioned that each and every time when you are analyzing the market, guys, do not just open up your chart and just scroll to the current pricing and be on some, oh, okay, price created a break here, and then this is my swing low, this is my swing high, this is my swing low, this is my swing high, right? Otherwise, you won't be able to get it right. But if you understand and look left each and every time, right, you would understand that, okay, we have the swing high and the swing low, right? And then whatever that's in between, we classify it as internal structure. Now, we start to get a significant pullback around this area here. which means that now we can classify this high as our swing high, right? Does it make sense?
Yes.
Okay, because that's where we first got our initial significant pullback. It means that we can classify this as a single price swing, right? So again, we created this low, which has a significant pullback, but we are going to regard this low to be a swing low if it breaks what? The swing high that got created. Like I mentioned, this is subjective to however you wanna see it fit. But for now, let's just say this is a minor pullback, and then this would be your price swing, your next price swing like this, right? Right? And then eventually price breaks this price swing. But another thing, guys, I did mention that yesterday, right? What you need to understand is that yesterday I did mention that when you get a trend change, it doesn't necessarily mean that that price will immediately. Let me change my thing here. Right. So I did mention yesterday that just because you have a potential signal that we are getting a trend change, it doesn't necessarily mean that yes, we are certain. It's just a signal, right? I did tell you guys that when you have price breaking this low, it doesn't necessarily mean that that the trend is confirmed that now we are changing. I told you guys that it is going to be confirmed if we get a lower low and a lower high, right? So in this case, this will be my lower low. So we want to see price creating a lower high and then like this, right? So that's then and only then that it will get a confirmation. Because in some instances, you may find out that when price is pushing to the upside like this, right? And then price breaks the most recent low, you may find out that this is what is a liquidity grab in order to facilitate a new push to the upside, right? So yes, we can use that as a signal and work with the assumption that when price comes back to an area of supply around this area here, we'll look for shorts, right? Because we are seeing a protected low getting violated. But again, such a trade is not of high probability. Yes, most of the time it does work out, but it is not of high probability, right? So again, you can still wait for price to create a lower low, lower high. So now, again, I think I mentioned this. So it's supply 1, supply 2. At supply 2, this will be your confirmed trade, because you know that, okay, price has shown me what it showed you, the signal here, and then now I get the confirmation. Does it make sense? So
yes,
even here, right? Even here, like I mentioned, excuse me, like I mentioned, price created a swing low, a swing high. Even though we get that change in trend, right? So this will be your boss around that area there. So even though you get that change in trend, it doesn't necessarily mean this could be a liquidity grab, right? So the trend is not yet confirmed. But in this case, if ever you'll be regarding this as a low, a swing high, a swing low, right? Now you have a break of market structure and a trend change here. So after this trend change, price created a lower low. Let me just use a different color. Price created a lower low and a lower high, right? And then a lower low again. So you can anticipate that, oh, okay, the bearish trend has already started, right? And then another thing is that what you need to see is that around this area here we have a bit of a trend line around this area here, whereby price could try and reach out for whatever liquidity that's resting around this area here, right? Another thing, because in the morning, yes, just as much as I was looking for a trade around this area here, again, it's very, very important to always wait for that extra layer of confirmation each and every time, right? So I'm on the 4-hour time frame. Yes, I was looking for a reversal around this area here, right? But now when you look at the 15-minute time frame, as price is pushing into that 4-hour time frame point of interest, right? So what's happening here as price is pushing into that 4-hour time frame point of interest? Let me just do this so that it can be visible on the lower time frames. Right, so as we are scaling down to the 15-minute time frame, we need to observe price again, right? You don't want to be taking a sell in a downtrend, in an uptrend, I mean to say, right? So yesterday I did mention that we were looking for this high to get taken out, right? And once we take out that high, that's then and only then that we can be on some, okay, let's start looking for some buying opportunities. And then at a later stage, you're going to learn about something called a flip zone. So we had a flip zone around this area here. So price never came back to mitigate that flip zone, right? So we mitigated supply first. But now let's look at how is price pushing, right, to the upside when it is mitigating supply. So always look left. Price created a low, a high, a low, and then whatever that was in between. Now you do understand, right? Whatever that was in between this trading range is internal structure. So this is internal structure up until we break this this high, right? So once we start breaking the high again, we can check, do we have a significant pullback here to classify price to have created a swing structure? Absolutely not, right? But we can clearly see that we have minor pullbacks, right? So we have minor structure of a pullback, a continuation, price broke this outermost high, a pullback, price breaking the outermost high again, and then a pullback, and then a continuation. So as you can see, as prices are tapping into this 4-hour time frame point of interest, it is still very much bullish. Now, how could we have gotten that confirmation, right? So if this is the point of interest, what we could have done is we could have waited for that shift, right? So we never got that shift, hence it doesn't permit us to look for some shorting opportunities. Does it make sense in terms of the difference between internal structure and, because right now, like I mentioned, we want to see internal structure, right, getting taken out. So in this case, where is my highest point? Derek last night mentioned that my highest point is this one. It will be classified as my swing high. This low will be classified as my swing low, right? So this is minor or an internal structure because we don't have a significant pullback, right? So where's my outermost low? This is my outermost low. But now, how do we know that, okay, price has created a potential swing low? We can see shift there, right? So once we get that shift, it means that, okay, the pullback is in play, but the overall structure is bearish, right? Does it make sense? The overall structure is bearish, swing structure is bearish because we have that high and the slow. And if you scale up, guys, if you scale up, let's say for example you scale up to the 4-hour time frame or the 1-hour time frame, you're going to see that whatever that you're seeing, it is indeed in line with whatever that you're seeing, you're identifying as internal structure and minor structure, right? So as you can see now, if you understand swing structure and internal structure, we can clearly see that we still have this highest point here that led to a creation of this low. So it correlates with whatever that's happening on the M15, right? That's my swing structure. So my trading range is from this high and this low. Whatever that happens in between, it's classified as internal structure. So again, you can still look, like I mentioned, that you can still be on the higher time frame and still be able to identify your internal structure, right? It doesn't necessarily mean that you need to scale down to the lower time frame and so forth for you to see that. So with that being said, as you can see right now, I don't know if we let's say, let's do this from this high, and then you need to ask yourself, do we have a candle body close above that high? Absolutely, we do have a candle body close above that high. And then again, this is my this one is my supply on the 1-hour time frame. As you can see, we had a bit of a reaction from that supply, and then it created what we call a flip zone. Around this area here, we have a flip zone. So what can happen now, you can still look for some buying opportunity because we have a potential trend change, right? So if price happens to come back now to this zone, you can still look for some buying opportunities to the upside. But now, what is it that you want to see first before buying? A run on a higher time frame is a trend on a lower time frame. So we'll work with the assumption that on the M15, price will be creating lower lows and lower highs there, right? And then you'd want to see that high getting taken out, identify an area of demand, and then look to take your trade from there, right? So that's the extra layer of confirmation that you need to wait for each and every time. And like I showed you earlier on, that we used the very same concept to understand that, oh, okay, I can't take shorts around the supply simply because as price is pushing into this zone, it is bullish, right? Are you guys following? I think Primrose was...
Guys, are we still on?
Yes.
I think Primrose was last time when we communicated, you struggled very much with getting these confirmation entries. But does it make sense right now why you have been getting it wrong?
Yeah, it does make sense.
Okay. So with that being said, what we're going to be focusing on throughout is there are time frames. There are specific time frames that I normally use as my major time frames, right? So we have what we call multi-time frame market structure, right? So the time frames that I normally use are the weekly, right? The daily, the 4-hour, and the 15-minute time frame, right? So those are the time frames that I normally look at, right? So now, what do we use these time frames for, right? I normally use the weekly and the daily to get like a directional bias, right? So what's the weekly? Is the weekly bullish or is it bearish? So it's for my buys each and every time, right? These time frames are for my buys. Now, what do I use the 4-hour time frame for? This is for my is my median time frame, right? My median time frame. And what's the 15-minute time frame? This is my my lower time frame that I will be looking for trading opportunities from. In order for me to take those 1-minute time frame, I wanna see. Okay, sorry about that. This is my lower time frame, right? And then the 1-minute time frame, I normally use it for entries, right? I normally use this for entries. So, okay, I'm sorry about that. I spelled that wrong, but right. So on the weekly, the daily, again, you're going to repeat the very same process, right? You look for your swing structure, your internal structure, right? And if you are able to see the difference between a swing structure and internal structure, if you're looking at the weekly time frame, and from the weekly time frame, you see you are able to differentiate between internal structure and swing structure, right? Within your internal structure, you will find out that that's your daily time frame trend, right? On the
Sorry.
yeah.
Fred says he cannot hear anything, so I don't know if other people hear you, but I do.
I beg your pardon.
Trey is saying that he cannot hear a thing, so I was asking if he has a problem, but I do hear you.
I think
so maybe.
I think it's a problem from his end.
Okay.
Are the other guys able to hear me?
Yes, we can hear you. Well, I can hear you.
Okay. So, as I was explaining, so if you are using like the daily and the weekly, right? And you find out that, let's say for an example, you're on the weekly time frame, right? And on that weekly time frame, price is creating, let's say internal structure, right? You will find out that on the daily, when you look at this price action here, you will be having a massive downtrend, right? Again, if you identify a daily time frame trading range, right, let's say for an example, it's from this area here. Now, what will be happening on a 4-hour time frame around this area here? You will be having a 4-hour time frame, around this area here. You will be having a 4-hour time frame downtrend, right? So, if you magnify that to a 4-hour time frame, price will be creating lower lows and lower highs, right? And if you translate that to the 15-minute time frame around this area here, price will be creating lower lows and lower highs on the 15-minute time frame. Now, the big question that you need to ask yourself is, am I trading? What is it that I'm anticipating right now? Are we mitigating let's say for an example, are we mitigating a weekly time frame point of interest, right? So let's say for an example, on the weekly time frame, we have, sorry about that, we have swing structure like this, right? Prices recently created a breakover market structure, right? So let's just see if ever you guys are critical thinkers, right? What is it that we're anticipating right now? What is it that we anticipate?
Pullback.
Okay, let's say this is my daily time frame, right? What is it that we're anticipating right now from this daily time frame? In this case, we have price created a swing low, swing high, and then it is pushing to the downside. So it means that we are currently anticipating a pullback, right? Now, the pullback will be what will be happening on the lower time frame around this area here. So let's magnify that to the 4-hour time frame, right? So we know that okay, the daily time frame is bearish, right? And we are currently anticipating a pullback, right? So where do we want to see that pullback ending? At a later stage, we'll talk about premium and discount, right? But for now, let's just work with the assumption that we want to see our pullback, coming back to an area of supply in this case, right? Okay, cool. It's okay. But what's happening on the 4-hour time frame is price is pushing to the downside. On the 4-hour time frame, price will be creating what? Oh, sorry about that. On the 4-hour time frame, price will be creating lower lows and lower highs, right? Lower lows and lower highs. Now, how will we know that the daily time frame pullback is now in play? How will we know? How will we know that the daily time frame pullback is now in play?
Would it be a break of structure on the 4-hour?
A break of structure.
Yeah, the shift in market structure on the 4-hour.
A shift in market structure, right?
Internal shift.
Absolutely.
Okay. Okay. Let's say for an example right now, I just wanna see something, right? Let's say this is the 4-hour time frame. Let's say we have our M15 around this area here, right? And the 4-hour time frame has now created a break of market structure here, right? Now, what is it that how can we go about anticipating a 4-hour time frame pullback here? What is it that we want to see on M15? On M15, price will be in a downtrend, right? Creating lower lows and lower highs. Now, how are we going to see that a 4-hour time frame pullback is now initiated?
Would it be the internal structure in the 15-minute?
Okay, on the M15, we want to see a shift in market structure, right? We want to see that trend change. So we're going to wait for that shift around this area here. So we would know that okay, now a 4-hour time frame, pullback is now in play, right? But now, what is it that we'll be targeting on the 4-hour time frame? We'll be targeting a 4-hour time frame supply, right? So it means that, excuse me, it means that if we happen to buy around this area here on the M15, right? Let me do this. If we happen to buy on the M15, we know that we'll be buying what? The 4-hour time frame pullback, right? And like I mentioned earlier on, that each and every time when we are trading, we work with the assumption. We work with the assumption that, if the 4-hour is bearish, we work with the assumption that we're going to continue looking for some shorting opportunities up until, right? Up until the most recent protected high gets violated. So in this case, I don't know if ever I have a different color here, but let me just see. Okay, yeah. So I have a different color. So my question is, what will be happening on flip? Okay, let me do this. What will be happening on a 1-minute time frame here, as price is pushing towards mitigating the 15-minute time frame? So what will be happening there on the 1 minute?
It's the same as the 15-minute, but micro. It's like the break of structure within that line that you have drawn.
Nice one. So in order for us to buy this 15-minute time frame demand, we want to see a 1-minute time frame, shift, right? I don't know why this thing is creating a lot of colors, but we want to see that 1-minute time frame shift, and then identify a 1-minute time frame 1 minute time frame area of demand, and then that's where we're going to get that entry. And when we are buying, right, when we are buying here, our main target is what? The 4-hour supply, right? So it means that on the 4-hour time frame, we'll be having that pullback now, right? Once price hits the 4-hour time frame supply, we take our profit, right? So it means that now on this price leg here, the M15 will be bullish, right? On this area here, as price is pushing to the upside here, right? Now, how are we going to get a confirmation that now we can sell on this supply here? We want to see an M15 shift, right, in market structure each and every time. So, okay, if it happens that on the 4-hour time frame, price ends up breaking the protected high, right? Let's say supply doesn't hold, and then it ends up violating that. What will be happening on the daily time frame? What will be happening on the daily time frame?
The pullback.
The pullback, right? So it means that the pullback will now be initiated, right? So how can we catch the daily time frame pullback, right? We can identify a 4-hour time frame what? Demand, right? We can identify a 4-hour time frame demand because we are seeing that price now it violated the most protected low. It means that there is a potential trend change. So we can potentially wait for price. Sorry about that. That's not what I wanted to do. We can wait for price to come and mitigate the area of demand, right? Now, what will be happening on the M15 as price is coming into this 4-hour time frame demand? Price will be creating lower lows and lower highs. We'll wait for that M15 shift and then an M15 area of demand mitigation, and then the move to the upside will now get initiated, right? So once we buy around this area here on the 1 minute time frame, where is our target now? Our target will be the daily time frame supply, area of supply. Now, once we reach the daily time frame area of supply, what is it that we should do now? I just want to see if ever you guys are paying attention. Once we reach the daily time frame supply, what is it that we should do now?
Look at the breaker structure on the 15 minute.
On the 15 minute, okay? That's your opinion.
On the 4-hour time frame, look for a structure shift on the 4-hour time frame.
Okay, that's your opinion from Primrose. The other guys?
Structure shift on the 15-minute time frame.
Okay, structure shift. Who was that? Is it Trey?
Ah.
Okay, who else? Richard, let's hear. Okay, let me tell you something, right? This is how you're going to use the time frames throughout, right? When you're looking at the daily, you're going to look for a shift on the 4-hour. When you're looking at the 4-hour, shift on the M15. When you're looking at the M15, shift on the M1. Does it make sense? If you look at the daily, right, and you scale down to the M15, you'll get a lot of false signals, right? You'll get a lot of false signals. Price may create a shift, but it continues to the upside. It may create a shift, but if ever you get your shift on the 4-hour time frame, and then you get that extra layer of confirmation that because the time frames are not far from one another, right? Even when you are refining a point of interest, right? We'll talk about that at a later stage. When you're looking at the daily, you can't use the refine the daily time frame point of interest on the M15. That's called over refining, right? You can only refine your daily time frame point of interest on the 4-hour time frame, and you can refine a 4-hour time frame point of interest on the M15, right? But the 1 minute time frame, guys, it's just for execution each and every time. Like I mentioned, we use the daily for a bias. We use the 4-hour time frame as your median time frame, right? So that's where you want to participate in. You want to see those major breaks. You want to identify your points of interest from, and so forth. The M15 is used to confirm that the 4-hour time frame point of interest will hold or it won't hold. And then the 1 minute time frame is for execution each and every time. Does it make sense?
Yes.
It's a simple approach, right? You just need to understand that when I'm looking at the daily, right, you need to ask yourself, is the daily time frame on the daily time frame, are we mitigating a point of interest, or are we looking to take a counter trend trade each and every time? So if we are looking at a counter trend trade, it means that you want to see the 4-hour time frame creating a shift. Once you get that shift, but you need to, at the back of your mind, you need to understand that, okay, this is a pullback. So I won't be looking for those bizarre long-term holding opportunities to the upside, right? You know that, okay, this is a counter trend trade, so I shouldn't risk much, because in most cases, like I mentioned, guys, counter trend trades, they need you to get used to the entire trading system. Once you get used to the entire trading system, that's then and only then. But in the meantime, what you can do is, whenever you are seeing a counter trend trade, do not take it, right? Do not take that trade up until you see that, oh, okay, this thing has been happening. This is what I wait for. This is what I should see, and so forth. That's then and only then that you can start taking those counter trend trades, right? Because Derek, as you recall yesterday, right? As you recall yesterday, I told you very well that, in order for me to start looking for some buying opportunities into this area here, I always want to see. I was looking at the 4-hour time frame. You recall? I was looking at the 4-hour time frame, and then I was on some, okay, I'm looking for price to come into this area here, right? But I am going to start looking for buys into this level if and only if what happens, if and only if the 15-minute time frame creates a shift. That was my condition. You see that it correlates with whatever that I showed you earlier on. Did you see that?
Yes.
Yeah, so that's the logic behind it. It's just that it requires a lot of patience. But once you master that, you're going to see that, oh, okay, so this is what I see. Now I can anticipate price movements like this. It's easy, right?
Yeah, it actually is.
Yeah, it's a simple because when it comes to trading, you need to repeat the same thing over and over and over and over again. This is my trading system, right? This is what I do on a daily basis, right? And I just want to see. I apply these rules time and time and time and again. And yesterday, yes, Derek, it didn't make sense, right? It didn't, right? Why was
Right.
I? Yeah, but now you see that. Oh, okay. So that's the main reason why he was looking for that shift first before he can start buying. The main reason why I was looking for a shift first is simply because price action is still bearish, right? Because we were currently trading within this range high and this range low. So that was my current trading range. And technically price is still bearish because it is creating what? It is creating some lower lows and lower highs. You see that? So I can't buy in a bearish market structure. I need to wait for that shift first, right? I need to wait for that shift and then a mitigation and then a continuation. And when price reaches this area here, what is it that I wait for? I can't sell in a bullish market structure. I should wait for a shift each and every time. So I never got that shift. It means that I don't take a trade, right? Because I know that at some point in time people will be on some, no, you told us that we will look for sales when price reaches the 4-hour time frame point of interest. Yes, I did say that, but you should always wait for that confirmation each and every time. That confirmation that is going to tell you that price is respecting this area here. And as you can see, as price is pushing to the upside, what is happening here? The lows are not taken out. As you can see that the lows are not taken out, the outermost lows, right? It means that price is bullish. But if we got a low getting taken out, it means that, oh, okay, now I have a potential shift. Does it make sense?
Yes, it does.
Okay, so any questions? Any questions? Any questions? Excuse me.
I want to ask about the 1 hour time frame.
What about the 1 hour?
So, which other time frames are in good combination with the 1 hour time frame? Like, for example, you use the daily, the 4 hour, the 15 minutes, and the 1 minute time frames. So, I just want to know a great combination when maybe you're including the 1 hour time frame.
Normally, what I use the 1 hour time frame for, I use it, let's say for an example, excuse me, let's say for an example, I'm looking at a 4 hour time frame point of interest, right? And I see that it is big. That at times whereby you'll see that, hey, this 4 hour time frame point of interest is huge. What I do is I scale down to the 1 hour time frame and try to refine that 4 hour time frame from there. Because there are times, I don't know if it makes sense. There are times whereby you'll find that
you do.
You'll find out that the 4 hour time frame. Let's say I'm just giving you an example, right? Let me just remove all these drawings. Let's say for an example, you are on the 4 hour time. You see this huge bearish candle. Let's assume that that's your 4 hour time frame point of interest, and you find out that you have this huge zone like this, right? So what I do is I scale down to the 1 hour time frame. I know that, oh, okay, I'll get like a single 1 hour candle that initiated the whole push movement to the downside. That's what I use the 1 hour time frame for.
Okay, so can I still use the M15 for the shift?
Yeah.
Of the
positive.
Refined
Positive
point of interest.
Yeah. Okay. Always wait for that extra layer of confirmation each and every time.
Okay. And the inside bar indicator thing on the chart, what is it used for?
The inside bars, they just show you that, oh, price here was neither pushing to the upside or to the downside, right? So I normally use that as my areas of supply, my areas of demand, and all that. They do come in handy.
Okay.
Yeah.
Thank you.
Because when it comes to an area of, just for an example, around this area here, so as you can see, we have this inside bar. Let me just zoom in. We have this inside bar. This inside bar. After this inside bar occurred, it's where we had a significant push to the upside. And if you understand the logic behind this, you can clearly see that we had price pushing up, pull back, push up, pull back, push up, right? Do you see that? So it means that this is my last area of demand, right? And again, guys, when you look at this closely, right, we can clearly see that we had this high which took out this low, and then we have a trend change here, right? So we are on the daily time frame. So the 4 hour time frame shift, okay, that occurred around this area here. It's just for you to be able to take the counter trend trade, right? It doesn't necessarily mean that now price is overall bearish and all that, right? It was just for you to take some shorting opportunities into what? Into this point of interest here. But as you can see, we never reached that point of interest, and it does happen sometimes, right? Price doesn't necessarily need to always come back to points of interest and all that, but there is a logic that we use. I'll show you at a later stage that what is it that you can anticipate depending on the time frame that you're looking at, right? Because let me just give you an example. Let's say you're looking at the daily time frame, price creating higher highs and higher lows. We get that break of market structure, right? So we understand very well that a run on a higher time frame is a trend on a lower time frame. So if this is a daily time frame, now on the 4-hour, let's imagine what will be happening on the 4-hour time frame. Just as much as we are anticipating that price will come back to this area here, right? We are anticipating that price will come back to that area there. So on the 4-hour, price will be in a bullish market structure, right? So price will be creating higher highs and higher lows, right? Now, once we get that shift, right? That shift, it means that the pullback will be initiated on the daily time frame, right? Again, let me just see if ever you guys can be able to use some bit of logic. How can we spot that the daily time frame pullback is now coming to an end? How can we spot that the daily time frame is now coming to an end?
A shift or break a structure on the 4-hour.
Okay, on the 4-hour time frame, price will be creating lower lows and lower highs, right? So once we get that shift, it means that okay, there is a potential that the daily time frame pullback is now coming to an end, right? And then we can initiate another push to the upside. So you can clearly see that we can still use market structure in order to catch this this pullback here, right? Even though it hasn't come back to an area of significance. Do you guys get the logic now?
Yes.
Yes.
Is it tricky, or because let me just say 60% of the time.
So
okay.
Can price still come back to the zone here?
It might.
To this demand after.
It might.
Okay.
It might. It may not. So are you just gonna stand by and doing some? Nah, I'm waiting for price to come back to an area of demand. Yeah, no, I'm waiting for price to come to an area of supply. Are you always gonna wait for that? Go and back test and identify areas of supply and demand, and tell me how many times did price mitigate those points of interest immediately after getting a break of market. So just open up your chart, do identify your areas of supply and demand, and then do some counts and be on some, okay, out of 50, price mitigated the point of interest like 10 times or 15 times or 20 times or 50 times, right? And then look at the ratio. Once you see that ratio, you will see that in most cases you'll miss out on some significant movement, because what happens is that in most cases, right? In most cases, what happens is that let me just do this. Let's say you're on the monthly time frame, right? And the monthly time frame is like this, right? And then we have a monthly time frame point of interest around this area here. Price comes and mitigates the monthly time frame point of interest. What you need to understand is that price action from a higher time frame is the most reliable, right? So it means that if the investors see that price is mitigating a monthly time frame point of interest, how is price going to move away from that point of interest? It's going to move impulsively, right? Now, if we work with that assumption that price will significantly push away, just look at the significant levels, right? After mitigation, price just, there is an increase in volatility, right? Price just significantly pushes to the upside. Now, using that knowledge, if we are mitigating a monthly time frame point of interest, we anticipate a significant push to the upside, right? So, which means that now, with the high volatility on the weekly time frame, we will find out that we have minor pullbacks, impulsive movement, minor pullbacks, impulsive movement. You won't get those, significant pullbacks continuation. Normally, we get these significant pullbacks when price is about to retrace, right? When price is about to retrace, you'll find out that you have multiple mitigations. You'll find out that price pushes up, pull back, comes back, mitigation, and then eventually you'll see this, a huge drop, right? It means that price wanted to turn around that area. Once you see multiple mitigations, just know that there is a high chance that price will reverse, right? Because there is the volatility around this area here. It's low. It means that, okay, if ever price is coming into a point of interest, right? Let's say, for example, a point of interest, take note of the multiple mitigations that occur there, right? And take note of how, after the mitigation, how does price move away from that point of interest. You will find out that it moves impulsively, and in some instances, you'll find out that you get a minor pullback and then it pushes to the downside. Now, you will be waiting for price to come back and mitigate what? This supply here, only to find out it creates a minor pullback and then it goes. So that's another thing that you need to take note of. Are we together?
Yes.
Yeah. So after a mitigation, you'll find it. Look at this. Look at how price is. You'll find out that there are some multiple mitigations when price is creating a pullback here. But what happens after price mitigates a point of interest? A huge impulsive movement. You look at this. We have a point of interest here, right? We have mitigations as price is pushing up. How is price pushing up? It's moving slowly. But after the mitigation of the higher point, what happens? Price significantly pushes to the upside. At the back of your mind, you'll be on some, okay, I'm waiting for price to come back, what? To this area here. What happens? It pushes to the downside impulsively, creates a minor pullback, and then pushes to the downside again, creates a minor pull, pushes to the downside. You see that? Do you guys see that? But when we are approaching a point of interest, the very same thing, it's there on the 4-hour time frame, on the 4-hour time frame zone, right? So on the 4-hour time frame, on the zone that we were looking at earlier on, we had this zone, right? We had this zone. Look at how price reacts as it is pushing into that zone. Let's scale down to the 15, right? You will see that there are multiple mitigations, right? There are multiple mitigations as price is pushing into that point of interest. As you can see, we have a high and low. As you can see, around this area here, we have low volatility around this area here, right? Price is creating a high, a low. A high, a mitigation of some sort, a high mitigation of some sort, and so forth. But just that this point of interest, it failed to hold. After that, what happened? We saw an increase in volume or in momentum, right? So hence, you at a later stage you'll learn about sell to buy wicks, and there is a zone here. I can see a zone even though I don't scale down to the lower time frames, but I can see that there is a zone there with these sell to buy wicks. As you can see, after these sell to buy, what happened? A huge momentum to the upside, right? So that's something that you need to take note of. Probably you're learning some new things today, eh?
Yeah, it's becoming clear.
Yeah, so each and every time when you find that price is creating multiple mitigations, just know that there is a 70% chance that price may reverse because of those multiple um, mitigations. And once it reverses, notice the momentum that kicks in. If it was mitigating something, there will be huge momentum. And if you are trying to catch a pullback and beyond some, okay, I'm waiting for price to come back to an area of supply, you'll miss out on a lot of trades. So hence I use the concept of market structure each and every time. I know that, okay, when a pullback ends, right, I'm using the change in trend as a signal that, okay, the trend has ended, that the pullback has ended, right? So let's say pullback, right? In order to see, I don't have to wait for price to come back to an area of significance. I'm just going to observe what's happening on the lower time frame, and then price will be creating higher highs and higher lows. Once I see a low, protected low getting taken out, and then I start looking for shorts. I identify areas of supply on that M15. If it gets mitigated, and then I'll take shorts and so forth. Does it make sense?
Yes. So for that, let's for an example that you just erased it.
Oh, sorry about that.
You're fine.
Okay. You're saying?
So for that part we had red, that will be like the trend will be like your 4 hour going down.
It'll be your high.
And you were saying the pullback,
M15.
You'll wait for that breakage structure on the 15.
Yeah, M15. I'll wait for that shift on the M15. This is how you should use the time frames. The daily.
Okay, even though you said it didn't reach that supply area.
Yeah, so it's the daily. You look at the 4 hour. So the daily, you look at the 4 hour. The 4 hour, you're going to look at the M15 each and every time. So this diagram, right? So let's say we're looking at price to come back to an area of significance here, right? So if you're looking at the pullback, price will be creating higher highs and higher lows. But if you see a low getting taken out before price reaches a point of interest. Now, if this is the daily, it means you will be looking at the 4 hour. If this is the 4 hour, you'll be looking at the M15, right? But you don't apply that concept on M15 and M1. Like I mentioned, the M1 is for entries only, right? So that one you need to make sure that each and every time when you're taking your trades on the M1, price is mitigating the M15 point of interest each and every time. Does it make sense?
Yes.
Because price action from a higher time frame is the most reliable. That's something that you need to keep in mind. So we don't use this technique on the 15-minute time frame with the M1. You can be on some, okay, the M15 is creating lower lows and lower highs, and what you do is you scale down to the M1 and then try to catch that move there, right? You're going to get a lot of fake moves and all that. We only use the M1 when price mitigates an M15 point of interest. That's something that you need to take note of. We only use the M1 if price mitigates an M15 point of interest. Any questions? Any further questions? before we close?
No questions, but did we have like any type of homework or anything to do?
The homework, the homework that I gave you yesterday, it still stands. Go there, try to identify breaks of structure and swing structure in comparison to internal structure, but only identify swing structure, right? Where is your swing structure? Looking at whatever that I mentioned today, every time in order to classify something as a swing structure, you want to see a significant pullback. Identify those. Okay, what I would say is when you're looking at swing structure, let's say for an example, on the 4-hour time frame, you can identify swing structure with these minor dots as your swing structure, right? So that will be you marking up your swing structure, and then your breaks of market structure, identify them with a solid line. So this will be my breaks of structure with a solid line, right? And then you change in trends, changing trend, swing structure, right? Changing trend goes with swing structure. You're going to use that for you're going to use a solid line also. And then for your internal shift, let's say for an example, I mentioned earlier on that if ever we were regarding this low here as an internal low, so what you can use is you can use a dotted line to show me that okay, there's a shift in market structure, right? And then again, there are times whereby you will get shifts in market structure. There is a shift in market structure here on a lower time frame. There is another shift here, an internal shift. I don't know if ever you guys are able to see that, the internal shift. I don't know if ever you're able to see the internal shift. In fact, it's around this area here. Can you see that internal shift?
Yes.
Are you sure? Are you sure that you are able to see it? That internal shift there? Around this area here? Are you guys able to see the internal shift?
Yes.
Are you guys able to see it?
Yeah, if it was on like a 5 or 3 or 1 minute, but I can see it like in the wicks and things as a high in the wick. Yeah.
Okay. At least now you guys have opened, because here we have, as price was pushing up, we have a high, a low, a high, right? A low, and then a high, a low, right? Or rather minor low, and then we had price pushing to the upside here, and then a shift, right? Because here, okay, let me just draw this properly. We had a high, a low, a high, right? And then a low, and then a high, and then price pushed to the downside. That's where we got our shift. We have a break of market structure here, and then a shift. At least today, you guys you opened up your sixth sense in a way.
It really is like that. You really have to use your eyes and think.
Exactly. So you see that if you took this price swing as your price swing, right, from this low to this high, you could have anticipated this the high to have been created, because when you look at this area here, Let me just try to zoom in. When you look at when price is pushing to the upside here, we never really created a shift, right? We never really created a shift in market structure, an internal shift, because price pushed up, a pullback. Price pushed up, a pullback. Pushed up, pullback, pushed up, pullback, pushed up. That's where we get our shift. You see that? So price, even all along, it was respecting the lows. It was respecting the lows. The lows were not taken out up until this area here. Right? So, but around this area here again, if you're on the 4-hour time frame, you can't see that, right? So you can't see that if you're looking at the 4-hour time frame. You can't see that. Sometimes you won't be able to spot that on the 4-hour time frame, but it is still okay. But yeah, just on that exercise, just identify your internal shifts with a dotted line, right? So even here, as you can see, we have an internal shift. Do you see the internal shift here? Around this area here, do you guys see the? Let me just zoom in.
Yes.
Around this area here, are you guys able to spot the internal shift?
Yeah.
Are you sure?
I don't see it. I'd see like
I
don't see it. High, low, high. Is that very top candle?
Nah, there is a high, a low,
a
high, and then a shift.
Oh, okay. See?
And then a break of market.
Completely missed that.
Yeah. Do not forget, guys, I mentioned that when we are looking at internal structure, we can still use a wick mapping to wick break, right? So as you can see here, it is coming into play. We have a wick mapping to wick break. It counts as a break of market structure. You see that? We have a high, low, high, shift. Yes, we do have a minor high, a minor low around this area here, right? So in this case, we get like let me just do this. We get a high, a low, a high, a minor low, a pullback, right? But now, where's your trading range? From this low to this high. This is just a minor high, and then it goes, right? So that's where you get your shift. Does it make sense?
Yes.
Okay, perfect. Okay, guys, let's call it a night. It's almost 11 where I am. I don't know where you guys from.
It's 3 p.m. here.
Where are you from, Derek?
I'm in the United States, US. Ohio.
Oh, probably it's midday right now, for sure.
Yeah.
Okay.
Well, actually, it's 4:55.
Oh, it's 4:55. Okay. Primrose, where are you from? Let me guess.
South Africa. Yeah. Joburg.
I thought maybe you're from Botswana.
Yeah.
Okay, Richard, I think I know. Richard is from Nigeria, right? Richard? Richard is sleeping today, eh?
No, I'm not from Nigeria, bro.
Where are you from?
I'm from Tanzania, but currently I'm living in Uganda.
Oh, Tanzania.
Yeah.
That's great, guys. Trey, where are you from?
Botswana.
Botswana Bapula. Tawanda?
Yeah. I'm from Zimbabwe.
Zimbabwe. Okay, guys. Primrose, you're not far from me, but you're not far from me. You're not too far from me. You're just 40 minutes away from me. Okay, guys. Have a lovely day for Derek, and the other guys have a lovely evening. Okay.
For the homework, are we working on the
exercise,
price action or
exercise on that
the
exercise?
time frame? Yeah.
Yeah. Exercise the way that I indicated it there. Look at the 4-hour time frame from those dates, and then I'll give you guys a solution. I already have a solution for that problem because I gave the same guys in the mentorship the same problem, so it's there in the course and all that. So I already have like a solution to that problem in a recorded video, so it's going to be easy. I won't have to sit down and make another video. So hence I gave you guys the very same dates to look at, and then try to do those markups from around that time frame, that time scale, I mean to say.
Okay.
Okay, guys, bye. Eh?
So is it like possible you send the recorded video?
No.
To the
yeah.
And whoever is able to download it can.
You mean the recorded videos?
The recorded session.
Yeah, I'll
no, the ones that we have already.
Yeah, I'll try to make them available by tomorrow. I promise on that.
Okay.
I actually forgot to post the other one, but by tomorrow I'll make it a point that both sessions will be available to you guys.
Okay, thanks.
Okay, cool.
Good night.
Bye. Night.
And good day.